Hey, it's Tyrone Jackson, the Wealthy Investor, coming at you with another educational video designed to help you what? Increase your stock market profits on the investing side so that you can grow your wealth much faster than having your money in the mutual fund or in the wrong stocks. So the first thing you want to do is make sure you subscribe to this channel here on YouTube. That way, every time I post a new hot educational video designed to make you money, you will be alerted. All right, let's get right into it. Today, I want to talk to you about one of my favorite subjects, which is lowering your risks to increase your profits in the stock market. Lowering your risk to increase your profits in the stock market. Now, in the Wealthy Investor Program, we focus on two indexes. The first is the S&P 500 or the Dow Jones Industrial Average. These are where the stocks are that have the lower risk, the higher earnings, and guess what? The banks, the institutions, they love trading and investing in these names. These names get a lot of media, and some hedge funds are buying 1 million shares a day. Okay, that's really where you want your money, where the big money is, because when they come in bulk, the share price moves. I want to show you two stocks here. The first one I want to talk about is Tesla. Now, there is a difference in the stock market. The ticker symbol is TSLA, by the way. There's a difference in the stock market between liking a product and actually owning the shares. So people love owning Tesla stock. And if you look at this 5-year chart, you know how I'm always talking about long-term trends? Well, look at this. Obviously, over the 5 years, the last 5 years, this stock has become very popular. Okay? But it is a higher risk stock. 5 years ago, you could have bought your shares around $32 a share. They're now worth $215 a share. What does that mean? If I bought 1,000 shares at 32 bucks, my $32,000 would now be worth over $215,000. That is a huge, huge gain. However, this stock comes with a lot of volatility, and that is not generally good for your portfolio. If you have stocks here one day, shares at 183, and 30 days later it's down to 127, then it zooms higher. This kind of volatility makes it hard for you to sleep at night. And what's really happening here are the big traders are stopping out. That's something called a stop loss order, where I might buy up here and then I'll say within my account, if the stock ever drops $10, sell my shares. When you stop out, you hope that the shares decline, get down here, you get them at a low, and you could ride them back up. That's another trade. We don't do that in the Wealthy Investor Program, because the Wealthy Investor Program is all about monthly residual income, and we do that through selling in and out of the money cover calls. It's the one trade it's really hard to lose money on. So Tesla, not a member of the Dow Jones Industrial Average and not a member of the S&P 500. Lots of volatility, which means lots of risk in this stock, compared to a company I want to show you, which is United Healthcare Group. This is a slower grower, but notice volatility is less. This is a stock that you could actually use for wealth building if you do what we call in the Wealthy Investor Program buy signals. In other words, I'm going to start building a position down here, wait for the stock to actually increase in value, and then buy more. And I just can't stress this enough. Investing is about discipline. So is trading. What I like to teach people how to do is how to make fast money and then take those profits and put them to work in something that is stable. So this stock, as you can see, I don't want to cheat and say you could have brought it down here. Let's say at around 50 bucks a share, right? You'll notice it has gone up handsomely. When was the time to buy? Well, this is one of my strategies I love to teach. Anytime was the time to buy, as long as the earnings are there, but especially when the stock crosses $100 a share. Now, let me help you out with this special tip. This is why a lot of retail investors, people like you and I, don't make a lot of money in the stock market. And the reason is because they think that you want to buy a stock that's extremely cheap and then ride it up. And what I teach you is to buy a stock that is high because it's going higher. So in real estate, the motto is buy low, sell high. Well, one of the things you want to add to your investing outlook is buy high to sell higher. Buy something that's proven to sell higher. You'll notice that less than a year ago, the stock was around $100 a share. It's up $40. That is a 40% increase. So now that we understand that we want to buy high in certain instances to sell the stock at a higher price, then we don't mind stocks that cross 100. But if you're in a wealth building mode in terms of your investment strategies, as it relates to what? The Dow and the S&P 500, then you want to get stocks that are about to cross 100 or close to 100. Why? Because that's when the real institutional money comes in. See, they like winners too. Just this one tip could make you thousands and thousands and thousands of dollars over the next 36 months, because I'm trying to teach you how to play where the big boys and girls play, which is contrary to a lot of strategies floating around on the internet, which is buy really cheap stocks. Not at all. You see this pattern here? I want all that institutional money in every single stock that I own. When they cross 100, that's where the big money is, because the institutions start buying in larger lots. So if you get that, you understand two things. A, you want to stay within the Dow and the S&P 500, and you want stocks over a long-term period that look like this, not really the ones that look like this, because these stocks drive you crazy. So I always say a picture's worth 1,000 words. If you understand you could get rich like this as opposed to this, your portfolio is going to see an increase over time. Remember, there are all these tips and tricks to investing. You want to use fast money trades to finance your investing, and that way you will be doing what? Building wealth. Building wealth. So remember, you want to catch stocks right around $100 a share or right before they cross, because you want to get in the stock when the big money is about to get in, and then you're just along for the ride. And I realize for a lot of people, that doesn't seem like a strategy that really makes sense until you actually put it into play. So try it in your portfolio. Look at the stocks that you own, or if you're learning how to invest, embrace this idea and I'll help you along. So for those of you who really want to follow my trading strategies and the stocks strategies that I teach, you can just simply start a membership at witradeschool.com. I tend to teach in video format, because if you don't understand something, you can just rewind the video. And in Trade School, we have just about 80 videos, because I teach about 16 major strategies, again, designed to make you money in this market right now. Some are trading strategies, some are investing strategies. And if you ever get stuck as a member of WI Trade School, guess what? You send in your questions once a week, and I answer member questions inside our members area. So I hope that you make a lot of money in the stock market with the strategies that I'm teaching you now. If you need that support and you want to see what hot trades are going on the cover call site and which stocks I like that are about to cross $100 a share, join Trade School. Hey, listen, I'm always happy when you take a little bit of your time out to watch some of these tips and these tutorial videos, and leave your comments below if you'd like something to say. It's really important, and I like hearing from you. That's it from now. Tyrone Jackson, WI Trade School, saying happy trading.